And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Our guests today, three of the very best in the business. Anna Paglia is the new head of ETFs over at Invesco, who runs the #1 tech ETF in the world. That's the NASDAQ 100 QQQ Trust. She'll be joined shortly with Todd Rosenbluth from CFRA and Jay Jacobs from Global X Funds. Anna, let me start with you, though. It's just you and me for the first few minutes here. The best year for ETF flows in history in 2021. A tremendous close, particularly in November and December. Big inflows right across the board. More money coming from mutual funds converting to ETFs. I anticipate that'll happen in 2021 more. Is there anything, just generally, broad stroke, anything that can interrupt these continuing inflows into the ETF business?
No, Bob, that's the short answer to your question. The long answer is that you named it. We had a record year for the ETF industry in 2020. The industry has amassed more than $500 billion of new assets, and that proves a couple of things. First of all, the industry is not saturated, has not reached the capacity yet, but it continues to grow. The second thing is that investors really accelerate their adoption of ETFs in periods of market crisis. We have seen that in 2000, we have seen that in 2009 and 2010, we have seen it again in 2020. So I don't see anything in the horizon that can stop the growth of the ETF market. If nothing else, education is reaching all-time high for this technology. Adoption is becoming widespread. And, 2020 has also taught us a number of lessons on the resilience of the ETF wrapper, especially when it comes to fixed income ETFs.
Yeah. One thing that really struck me was that big tech ETF you control, of course, the NASDAQ 100 QQQ, nice flows there. But the junior QQQ that you debuted in the middle of the year also has done really well. You have $300 billion in assets under management there. That's essentially the NASDAQ 101 to 200, I guess you would call that. And the appetite seemed really strong for that as well. Your thoughts for tech in 2021?
It is. And Bob, we couldn't be more pleased about the success of our innovation suites. QQQJ, QQQM have really been embraced by the investor population. Invesco is at the forefront of ETF innovation. And for us, the key word is not really technology. It's really about innovation. We have seen that innovative companies were the ones that succeeded in 2020. And if you think about the NASDAQ 100 or the NASDAQ 100 Next Gen, QQQJ, QQQM, is not really about technology. We have had innovators in other sectors like healthcare or communication. So I think that we should expand our viewpoint and our concept of technology to go into innovation. Whoever is able to innovate, whoever is able to invest in technology development and research is really going to succeed in 2021 and beyond. And the QQQJ, QQQM really embrace that. Everything that brings innovative ideas to the market is likely going to find a place in those funds and in investors' portfolios.
Yeah, so tech is certainly having a moment. One thing that disturbs me a little bit is the concentration of in the S&P 500. The top 5 stocks, Anna, as you probably know, are almost 25% of the S&P 500. Overall, I think this is the highest concentration since the 2000.com bubble that we saw. I don't know what your thoughts are on this, but you do control something for people who are concerned about that, and that's the equal weight S&P 500, RSP. Could you just give us your thoughts on this concentration we're seeing? Is this worrisome? Is this like 2000, or is this occasionally happen? Should we not worry about it? How should we look at this concentration?
Well, Bob, I think that every time that there is concentration, you should be looking at that. You should be monitoring that. As you said, we do have a very effective product that is going to help investors hedge concentration risk. That's RSP, the equal weight S&P 500 ETF. The fund has performed well. The fund takes away the risk of concentration. And if I were an investor, that would be something that I would be looking at with a very close eye, because as you know, concentration can be good if the top 5, top 10 constituents of a portfolio perform really well. But as soon as you have a collapse, as soon as you have something unexpected happen in one of the big companies, your portfolio can take a very big hit in terms of returns. RSP is the vehicle of choice for those investors who have tried to take away concentration from the S&P 500. We have seen terrific assets, significant assets going into the fund at the end of last year and the beginning of this year. And to us, this is really reflective of the fact that just like you, other investors are looking at concentration in the S&P 500, trying to stay away from that and trying to diversify into other products that provide the same or similar returns to the S&P 500 index, taking away concentration risk.
The other big theme, other than concentration, which I talk about all the time at CNBC, is thematic investing. And I'm wondering if you think this is going to continue. We see, of course, here where you, Invesco, has a number of big thematic tech ETFs. TAN, the solar ETF, had a tremendous year, not only up price-wise, but a lot of new inflow. Clean energy, PBW, also did well. The water ETF, PIO, did well. Right across the board. I've sort of worn out the carpet talking about why investors like thematic ETFs. Could you briefly explain what is the attraction, and do you think that's going to continue, this style of investing based on themes?
Absolutely, Bob. I believe that thematic products are going to be the big winners of 2021 and beyond. People are expressing more and more interest in those products. Our clients vote with their money. And if you want to know what investors are going to buy, you just have to look at how they behave, their normal behavior in their day-to-day lives. Investors at this point in time, they are very conscious about their social responsibility, environmental responsibility. They don't just want to look at returns. They want to look under the hood, so to speak. They want to know exactly what they are financing by buying an ETF. And their sentiment, their passion, their strong belief really comes out when you look at the growth of ESG ETFs and thematic ETFs. With the thematic ETFs... All
right, I want to break...
Oh, sorry, go ahead, Bob.
Go ahead. I'm sorry. Finish your thought, Anna.
Sure. I just wanted to say that with thematic ETFs, it's easier for investors to bring their passion to life because they look at a theme, solar, water, clean energy, and they can invest in 100% in that. Okay.
I want to bring in our other two guests, both friends of mine, of course, Todd Rosenbluth and Jay Jacobs. Jay, Global X, which you control, has many of the thematic ETFs that Anna and I have just been talking about. I wonder if you can sort of give your thoughts on whether or not these will continue. I mean, you have some of the big ones. You have an infrastructure ETF, PAVE, I've talked about. You've got a cannabis, several climate change ETFs, and hot tech ETFs like a lithium battery ETF. Give us your thoughts on thematics for 2021. And do you have something that's going to come out of nowhere? Here's your chance to be a prophet. That's going to be a hot topic in 2021 we haven't thought about.
Yeah, absolutely. I mean, I agree with Anna. This is, we're living in a very disruptive time. We're seeing disruption in technology as advancements in technology are happening at a very rapid pace. We're seeing changes in people and demographics, how consumers decide to spend their money and aging populations around the world. And we're seeing a changing relationship with the physical environment, how we think about infrastructure and how we think about climate change. So disruption is happening in many different areas of the economy. And thematic investing and specifically thematic ETFs are really trying to harness that disruption. I think one of the reasons why thematic ETFs are growing so much right now is, let's just look back at history. If you wanted to invest thematically 30 years ago, maybe you bought a single stock, you bought a Microsoft, you bought an IBM to capture innovation. That gives you, good exposure 30 years ago to innovation, but not a lot of diversification. 15 years ago, maybe you bought a sector ETF. You bought a technology sector ETF, which gives you good diversification, but it's not really targeted to a specific theme like cloud computing or robotics. Now with thematic investing and thematic ETFs, you can really get the best of both worlds. You can get that targeted exposure to these themes while getting diversification across dozens of companies that are providing that exposure to a theme like cloud computing or cannabis or infrastructure development. So we think the rise in thematic ETFs is going to continue, especially in the new year. I think clean tech and clean tech related technologies like lithium and battery tech are really going to take off, as we've just seen a global environment that's become very focused on reducing and mitigating the effects of climate change.
Yeah. Todd, let me bring you here. You're an old hand like I am at watching these ETF business and thematic ETFs. Is there any roadblocks here to the concept? I believe that it fits very well with the concept of ETFs, particularly with the changes in the ETF structure last year, some of the legal situation last year with ETFs to make it easier for them to be created. Your thoughts on thematic? Is there any problems with it? Is there any roadblocks to it? And give us, is there something that's going to be happening this year that we haven't thought of that's going to be a big ETF theme? I'll give you an idea. Like, who would have thought work from home would have been an ETF theme in January of 2020? Yet it turned out to be that way. Obviously, that was a pretty hard game to guess. But if you had to guess, what would you say would be a big thematic ETF theme in 2021?
So I think the big challenge for investors is making sure they understand what they have. As Anna said, going under the hood. So PBW, which is an Invesco product, which is very popular, has about 40% of its assets in industrials and 6% in utilities. A competing ETF, which is from iShares, their Global Clean Energy, ICLN, which tripled in size, has the majority, more than half the assets that are in utility companies, and much less in industrials and technology. So these ETFs are not going to all perform the same. Even if you get the theme right, you got to make sure you understand what's inside the portfolio. The one thing I will say is the ETF industry does a great job of spotting that theme and then having multiple products that have come into the marketplace. We now have 3 work-from-home related ETFs that are directly tied to it, and then sub-themes like cloud computing from Global X and cybersecurity products from First Trust and others. So I don't know what that theme is going to be that comes from under the radar, but I'm confident the ETF industry is going to gravitate towards it relatively quickly.
Yeah. And how about you, Anna? Here's your chance to be a soothsayer for the year. Todd's right. The ETF structure is uniquely suited to be able to pick up quickly on these themes and turn them into investable ideas. Is there something out there that we're missing? I mean, it's pretty obvious clean energy is going to be a hot topic. It's pretty obvious diversity is going to be a hot topic. But if we're here 1 year from now and looking back, is there something you think we're missing that's going to prove to be popular?
Well, Bob, I would look at renewable energy as one of the topics that are going to lead the conversation in 2021, because when you have the combination of new policy changes and the technology advancement, think about solar panels today that cost 80% less than they used to. This is where the growth of an industry is going to come from. One more thing that I will be looking at is active non-transparent ETFs and ESG filters applied to active non-transparent ETFs, because if you have an opportunity to bring alpha with an ESG filter into the ETF wrapper, you may have some pleasant surprises this year.
Yeah, I want to pick up on that, but I want to go back to Jay for just a quick second. I've been reporting on the inflows in these thematic ETFs, but particularly the clean energy and tech-oriented for several years now, but in the last few months, they've gone parabolic. I guess my question, particularly on things like clean energy, is, and the stuff you manage is up 50% since the election. What legislation does anybody think is going to happen this year that it's going to justify moving these stocks up 50%? I guess I'm getting a little skeptical just on sheer valuation issues, or am I being silly for asking this kind of question?
No, I mean, it's a great question, and we have to look at it as it's not just regulation. I look at it as there's three different factors that move thematic ETFs forward in general. You have the business environment, how much is being invested in by businesses. You have consumers and how much they're spending on a specific technology or theme. And then you have the regulatory environment and government spending. So if you look at those three different segments, clean tech is really doing pretty well in all three. You do have Biden with a Democrat Senate behind him, which, he's been very focused on a $2 trillion infrastructure plan, which is inclusive of clean tech as well. On the consumer side of things, you see more and more people installing solar panels, buying electric vehicles. Electric vehicle sales were up 70% in China this year alone. And if you look at the business environment, you're seeing that, a lot of what's happening with ESG is not just about investing. It's about changing how companies operate. And one of the things that that's doing is companies are becoming, they're thinking about themselves as members of society. How do they impact the environment? How do they impact their customers? How do they impact their employees? So when you have this rise of interest in something like climate change or various social issues, you see companies really putting dollars behind that as well. So I think it's not just a regulatory change. I think it's the confluence of multiple different stakeholders that are pushing clean tech forward right now.
Todd, is that enough? I mean, it's a good point Jay is making, changing how companies operate. It's sort of the zeitgeist, sort of shifting the Rubik's Cube in everybody's head towards clean energy and diversity and ESG themes. But still, there's a point where the prices get stupid. And I know you're not a stock strategist or an analyst. You're an ESG analyst. But isn't there a point at which somebody's going to push back? I love to see inflows into these things, and they've been titanic. But is it reasonable to start asking questions here about the constant inflows?
So certainly, yes. I think the inflows, the fact that the stocks inside have climbed so much in many of these various themes is certainly something to be watchful of. So we at CFRA rate ETFs in part based on the holdings and what we think of the valuation of the holdings. And there are thematic ETFs, like, for example, SKYY, a cloud computing ETF, where we think the stocks inside are overvalued. And we think there's better opportunities that are out there. So investors really want to understand what they're getting, not just the theme, but the underlying stocks inside to make sure it makes sense going forward, not just in the past.
Yeah. And I just want to close with you and ask about the whole ESG theme. There's been a lot of discussion that there's going to be some pushback to some of these themes. So, for example, the SEC, there's already people floating around the SEC who are saying, we want to do a survey of companies asking them, what is your policy on climate change? Not that you're violating a policy, just what policies do you have? And the mere act of asking this question is a sort of nudge, a way to push them into thinking more about doing that. Already I'm seeing articles and people emailing me saying, aha, you see, this is very subtle coercion, maybe not maybe a strong word, but towards pushing people towards adopting policies on climate change. The same with diversity. NASDAQ recently said that they're going to be looking much more at boardroom diversity, particularly more women on the board, as a factor in listings at the NASDAQ. All of us seem to think that this is a good idea, but there are people who immediately pushed back and said, wait a minute, is this necessarily the role for the SEC? Is this appropriate given their role in the market structure? So I guess this is a broad question, a policy question for you. All of us feel that these questions need to be answered. The question is, what forum is the right one to address them in?
That's a very interesting question, Bob. And I would break down the answer into two pieces. So on the one hand, you have disclosure, because the SEC is really focused on disclosure, truth in advertisement. It is not enough to say that you are ESG. especially when E, S, and G mean so many different things for so many different sponsors. So one thing is about disclosure. Truth in advertisement, we want to make sure that companies that portray themselves to be ESG compliant somehow show what it means for them and disclose that. The other piece of the answer is pressure and pushing a certain type of behavior. So data shows that certain behavior associated with ESG is actually helping companies deliver better performance. So on my end, there's nothing bad with that. Pushing for a better diversity, whether it is gender diversity or any other type of diversity, is healthy. I don't think that the SEC is trying to change behavior, but it's certainly putting pressure on companies to come clean and disclose their policies. Now, that in turn may result in changes in behavior, which I think overall are healthy for the industry. And right now, we have seen that by focusing on ESG, you don't have to choose between performance and socially responsible investing, because ESG strategies have delivered very good results over the last few years.
Okay, we're going to have to leave it there. Folks, we have just scratched the surface. ESG, active versus passive, international versus domestic. We're going to be hitting on all of these subjects throughout the year on ETF Edge and on CNBC. My thanks to Anna, Todd, and Jay. And remember, you can watch all of the videos, all of them, for the last several years, etfedge.cnbc.com. And remember to tune into our podcast where we go into a little more depth on some of the subjects today. I'm Bob Pisani. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.